Hello, Maverick traders. Welcome out to your currency recap video for August 21st. Corey here with you.
Disclaimer. This video was created for professional Forex and crypto traders. Maverick Currencies is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional Forex and currency trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As always, we're going to jump in and look at the markets from a top-down approach. We're going to analyze what's moving, what's not moving, and as the great Wayne Gretzky says, we're going to try to skate to where the puck is going, not to where it is right now. But sometimes where it is right now is exactly where the puck is going. So as we look at today's performance, the S&P, the broader markets, up about 0.5%. Gold slightly higher, oil slightly lower, but not a lot moving. The NASDAQ was definitely the outperformer. If we look at the daily news, Bitcoin has surged to the downside, spiked sharply lower, but is currently holding that 26,000. Now, Bitcoin is a risk asset, and when it plummets, generally speaking, that's more of a risk-off environment, and that's what we've been in. US dollar has staged a nice recovery, bouncing back, and it's been my thesis for the past few months that the Fed was going to stay higher for longer, that they're like the golfer that plopped one in the water. They've got to take out more club. They got to fight inflation. They got inflation so wrong that they can't err on the side of letting inflation stay high for an extended period of time. And I think the market has come to that realization, and I think that's part of what the US dollar is doing here behaviorally. So as we look at the S&P, we had been in an uptrend. Well, now, my friends, we are in a little bit more of a downward trend. We've broken below the 50-period moving average. And look at the symmetry here. Look at the lows back there, and look at where we bounced from. Basically the same lows. Where do I think we could bounce up to? Look at the highs back here, and that probably gives you a good sense of where we could bounce towards, which is right underneath that 50-period MA. And it would also confirm a price pattern if we fail right there and set a lower high, what's called a head and shoulders pattern. A shoulder, a head, and then a shoulder over here, and this is called the neckline. So the confirmation of that would be a plunge below 43.40. But I think we're in sell the rally mode still in equities. Again, risk off environment. Now, oil doesn't show that. The oil markets have been exceedingly strong. Oil is moving to the beat of its own drum, and that's a good thing. It's not really highly correlated to the S&P 500. You can see that oil has broken out to the upside. Where I think oil has that support is really from the U.S. politicians probably making a strategic mistake with the Strategic Petroleum Reserve. They took that down to multi-year lows, and they haven't restocked it, and oil's getting out of control here on the upside. They may have to take a loss, and they don't like to do that. That's a taxpayer loss if they have to buy back the oil at higher prices. So they're stuck between a rock and a hard place. Bitcoin, like we talked about, holding right there around 26,000, but has been plunging to the downside and still looks like sell the rally mode there as well. If we look at the rest of this week, we've got some manufacturing and services PMI in Europe. We've got that in the US as well. Those come out on Wednesday. Thursday, not too much to talk about, but Friday, here's where I want to highlight the Fed and the Jackson Hole Symposium. What will Fed Chair Powell say? Will he continue to have a hawkish tone and so forth? The markets are watching that closely, so expect some volatility, US dollar volatility on Friday. Generally speaking, Fridays are supposed to be quiet and less involved. That's not going to happen this Friday. Let's look at some possible areas. So for the past few weeks, I've been steadfast in long euro, long Swiss franc, long pound, things like that, short Aussie, short Kiwi. And we've talked about this, that we've broken out to the upside. This is the euro chart. And now it's high basing, but this still looks more bullish than anything else. So can the euro move up and out from there? I think it certainly can. That might be the next trade. What about the pound? It has broken out over the past couple of weeks. Again, little bit of a high base pattern here the past couple of days. Still looks rock solid. What's on the flip side of that? Well, the short Aussie, short Kiwi is the gift that keeps on giving. We have plunged to new lows. Now, as we rally, there could be a little bit more rally in this, but if it does, it should set a lower high and continue its downward trajectory. The risk to reward is getting less favorable, I do have to say. This has been a great area to continue to be focused on the last couple of weeks. I'm going to shorten up my time period because at any point this could reverse and have a real corrective phase here where it spends a couple of weeks going up. So I'm just going to shorten up my time periods a little bit more, be a little bit tighter maybe with some stops and things like that, but continue to play that momentum until it tells you not to. And the last chart I'll highlight is a mega chart. This is a multi-year chart of gold. And this chart goes back to 2011 when gold peaked previously. It has failed against that in 2020 and 2022 and so far in 2023. But this price pattern creates a huge cup and handle, a mega cup and handle. This prices out really well. The size of the cup, the size of the handle. Now, why do I highlight this? Well, if you look at where prices are, this yellow line is the 50-week moving average. We really need to hold above that for gold to have any support towards that next move higher. Now, interestingly enough, sometimes there are patterns within patterns. Just as this is a mega cup and handle, here you have a more mini. So let me take off the lines. Here you have a more mini cup and handle. Check that out. And it could be bouncing right here. Up, and away. Next stop, gold moves above $2,000 an ounce. I don't know if that's going to happen. Certainly the US dollar's big rally the past couple of weeks has taken some of the shine off of gold, but it looks like there's multiple patterns saying we could hang in there and have a big run coming in the months ahead. I always like to highlight these charts beforehand so you can get prepped and ready and be watching for triggers and opportunities that pop up. The markets are in an exhaustion phase. We're in a risk-off environment. Continue to use proper position sizing, risk management, those things that we teach and emphasize at Maverick Trading. So the rest of this week, we'll keep you busy. We've got videos coming out all week long, and then our trading room to wrap things up. Have a great week ahead. We'll see you next time.